It turns out that early 1990s estimates that South Africa would need 60, maybe 70,000 cell phones tops were a bit of an underestimation. There are tens of millions of devices, not only in South Africa, but across the African continent and into the Middle East as well. Welcome to the Think Big series. It's brought to you by PSG. My name is Bruce Whitfield, and today you're getting independent insights into the world of telecommunications, specifically into the world of MTN, and more specifically than that, into the mind and the thinking of its chief executive, Ralph Mupita. Ralph Mupita was born in Zimbabwe. He was educated at UCT and at Harvard University, and he is an engineer by training. He did work as a civil engineer for a couple of years, building roads and bridges, no doubt, and since then has been building new inroads into the world of insurance, and most latterly, for the last 2 years, as chief executive of MTN. Ralph Mupita is with us on the gathering today. And Ralph Mupita, lovely to have you. About, 3-4 years ago, Rob Shuter returns from Europe, takes over as chief executive of MTN, and brings together the most astonishing group of A-type personalities, former CEOs, divisional heads, really strong individuals, and brings them all into a group as a new exco at MTN. That must have been an enormously exciting time.
Yeah, thanks very much, Bruce. And you're absolutely right. We joined, actually, it's about 5 years ago. I've been at MTN 5 years, so time does fly. And, we were coming in at a time when the company had its challenges from the 2015 SIM registration fine in Nigeria. And, our role and responsibilities there as a collective was to try and get the company back on track in terms of its performance and ensuring that we would be able to realize the full potential in the business. So, yeah, it's been a very interesting time. And as you say, in the early days, myself, Rob, Jens, Stephen van Coller, and a whole host of other guys all in one room trying to figure all of this out.
Was it tense? I mean, lots of people, strong-minded individuals, strong personalities, people who'd called the shots in their own enterprises. Did it ever get a little bit edgy?
No, I mean, I wouldn't say it got edgy in the way that, people may, assume, four former CEOs all in one room having different roles. I mean, we took it as an absolute challenge to try and get the company back on track. We all knew we brought different skills, into the role. I mean, I had more emerging markets experience than most on the team. I understood the continent, better than most. But, these guys were, long-time telco people, and I'm a financial services guy. But importantly, the company was also moving towards financial services. So I brought that additional weight in as well. So yeah, it was actually great. It was a great time and experience, working together. And I mean, Jens and myself are probably the last, two men standing from the original team.
But it's astonishing that Nigerian fine was in 2015. It dates everybody because everyone's got, really? 2015? And it feels just like yesterday for those of us on the outside. Talk to me about the shape of MTN as it is at the moment, because MTN goes through this astonishing growth phase throughout the African continent. It starts buying businesses all over the Middle East. And you, I think, have been gradually sort of dismantling some of that. And it feels like a more holistic Africa-focused telecommunications company now. Would that be a correct assessment?
Yeah, that would be a correct assessment. I mean, I think MTN, you could argue that MTN is now kind of in the third chapter. If you were to write a book about MTN, it's the third chapter. I mean, the first chapter would have been, post-democracy, coming in South Africa in 1994 and building out a voice-centric network, going into some of the Southeast African regions like Uganda, Rwanda. Those were some of the first markets. And then there was the Investcom deal in about 2005. But at that time, it was a very voice-centric business, very little infrastructure for wireless communication across the markets. So that's chapter one. And, we were generating, infinite service revenue growth and returns. And then the second chapter would have been the time when data services started coming in around 2007, 2008. And, the economics of the business changed because data was very capital intensive, and the return profile started to moderate and actually, looked a little bit poorer.
Break that down for me a little bit, please, because Steve Jobs, thanks to him, we have devices like this and many of them. And nowadays, every device is a smart device. BlackBerry thought they had the smart device, but I think we've learned since then that these things are far more versatile and astonishing in what they do. And it's all well and good to have the device, but unless you have the network infrastructure that supports that ability for these things to connect to the internet, it's a complete waste of time. And that's the game changer in 2007 and 2008 in terms of the economics of telecommunications.
Absolutely, you're right, Bruce. Because what happened with the iPhone was, actually, that was the point of transformation, where the phone became the computer, and the access to the internet, and fundamentally, created a whole host of services which people call over the top. The OTTs, so to speak, the streaming services that we now all enjoy, but, basically riding off the back of telecommunications infrastructure. And what happened 2007, 2008 to pretty much maybe 2 to 3 years ago, if not right now, is that, all the profit pools went to the over-the-top services, your Netflix, your Apples, your Facebooks, etc. They were the ones who benefited in an outsized way for the development of all this digital infrastructure. And that was off the back of smartphones. And so, the real profits were to be made, from over-the-top services. And the telco operators didn't actually build services that are adjacent to the telecommunications, or if they did, they weren't successful. So that's what happened 2007 to 2008 to pretty much, the last couple of years. And obviously, as MTN, we're trying to look at this very differently. And that's why I say that was the second chapter. And now the third chapter, what we're trying to do, from an MTN perspective, is to show that, Africa is different. You can actually build the infrastructure and either build the services or curate the services around the infrastructure. And for us, financial services is one of those areas that, seem, very obvious for us to expand into.
I want to get into some of the nitty-gritty of mobile money and this astonishing ability suddenly, 15 years after M-Pesa takes the continent by storm, suddenly it has real competition. But let's get on to that in just a moment. The shape of MTN then, is it an Africa-focused business? Are you exiting all of the Middle Eastern countries? You're going to stay in some of them?
Yeah, part of our strategy now is that we really want to simplify the group and kind of focus and allocate our human and capital resource to the African continent. We've exited, Syria, we've exited Yemen. We are, looking at exiting Afghanistan. We made some good progress end of last year, but, events there, set us back a little bit. But, our strategy is to exit the Middle East and just purely be a Pan-African business. I think, with simplifying the portfolio, I can spend more of my time on matters in Nigeria, South Africa, Ghana, etc. So we are exiting the Middle East, and want to be purely focused on the opportunities that we see, within the African continent.
How many customers have you got? When I'm thinking 300 million, it's probably closer to 320 or even north of that. Where are you?
No, quite there. We were at the last reporting period about 272. So not too far from your 300 millions, but 272. Nigeria being the biggest by some distance, 68 million. South Africa 32. So South Africa and Nigeria are our two largest markets. Basically, pretty much 100 million. Subscribers within these two markets.
And it underpins, I suppose, your determination to get Nigeria right, because a lot of people at the time of that fine in 2015 will say, hold on a second, but this is MTN being held over a barrel and being held hostage, but you've negotiated your way through the settlement payments and tax discussions and all sorts of other things. I think very carefully, a little bit like somebody who might be playing hopscotch in a minefield, not wanting to agitate regulators in that market, because it is a big and flourishing and important and vast opportunity still.
Yeah, I mean, Nigeria is 40% of our earnings. So, and it's not a business that we can say, well, look, it's trivial, small, let's get out of it, let's not focus. You know, we believe we need to make it work, and we feel that Nigeria, will, continue to be a medium term, the long term, an important part of the MTN Group. So, I mean, there's enormous opportunity in Nigeria. I mean, if you think about, let's say, smartphone penetration is 50%. So only 1 in 2 Nigerians on our network uses a smartphone. South Africa is more like 80–85%. The bulk of our revenues in Nigeria are still voice. So though data is growing very quickly, fintech will come up quite nicely over the medium term. The growth opportunities there are significant. And, we've got a great network there, a leading network with a great team on the ground. As in any market, you've got to navigate, the risk environment and manage the stakeholders well as well. And, we've made quite a lot of changes in the Nigerian business over time. We have a refreshed board, very ably led by, Dr. Ernest Ndukwe. Carl Toriola has come in. We got a new strategy, and we've been looking to execute it. And we think in the last 2 years, we've been making progress. So Nigeria is a market that we're really determined to make work. Once in a while, there are bumps along the way. But if you look at the return profile, I mean, we put in, the initial capital that went into that business, call it, close on to $300–400 million. That's given, investors over the last 20 years plus, an exceptional return, or even on a risk-adjusted basis.
And we see when one looks at your results, one looks at the ARPUs, which is my favorite thing to say when it comes to telecommunications companies, average revenue per user. Gradually, that begins to come down as people transition from voice into data consumption and making WhatsApp calls and circumventing the traditional ways of communicating. And more people are communicating via platforms like WhatsApp and others, and not doing the voice communication. But you seem to have multiple stages of life of the business. So while one South African market seems to be maturing far more quickly than perhaps other markets, others are in later stages of development, which then gives you an opportunity, I think, to sort of flex and change the business over time, evolve it.
No, absolutely. I mean, to your point, South Africa, I mean, we don't have voice growth in South Africa. So we look at the level of voice shrinkage year on year. And if we are kind of, low, somewhere between, -9% to -5% voice growth, South Africa, it's a victory. But, in Nigeria, we've got very healthy voice growth, as we have in a market like Ghana. So the kind of S-curves, we've got a couple of S-curves across our business. South Africa is probably the most modern business that we have that's consolidated. Actually, Iran, which is an investment, is probably even more sophisticated, as a business, and much more mature. So we have, different businesses that are on different levels of maturity, and the most mature is relatively South Africa. Nigeria, Ghana, Cote d'Ivoire, Cameroon, these are businesses that are still, adding, subscriber bases where people are for the first time using the phone, let alone use data services. So you're absolutely right. In the context of our 19 markets, different, stages of growth, that gives us the momentum and the growth that you'd have seen the last couple of years.
And cell phone companies are increasingly being seen like railway line layers, as the tracks upon which the future is built. And as America opened up in the 18th, 19th century, we saw railway lines going in first and industry followed. In the same way, I think that is the sort of big vision for what mobile telecommunications does in terms of laying digital railway tracks into the future.
No, for sure. And actually, that whole kind of laying of the digital railways started at that particular point in time in 2007, 2008, when the iPhone came, because we started building, data-capable kind of networks and pouring, in quite a bit of capital. But people were then calling them the dumb pipes. It's a utility. And so we've been, as MTN, fighting that categorization that we just railroads and kind of dumb pipes. That we can actually, deliver, services on top of the infrastructure, that can generate, top line growth and also improving return profile. But what has happened since COVID, Bruce, is that I think, let's call them nation states, countries more broadly, have realized that actually this digital infrastructure, these are, systemically important assets for a country. It's not just, electricity that's important. It's not just banking systems. And even electricity and banking systems, some of this infrastructure sits, it has as a foundation the telecommunication services, banking in particular. So there is an increased awareness since COVID that this is critical infrastructure that needs the right level of investment, going into the networks to make sure that everybody has access to, to data services, and it's of high quality.
I don't know what your favorite phone ever was. Mine was the 3310 made by Nokia.
100%.
Fabulous device, very good at talking on, very good at sending eventually an SMS if you could, if you could get the predictive text right, and you could play a fabulous game of Snake on the phone. But imagine if COVID had hit in the analog era of the 3310. I think we had, as far as, if the planets were all aligned, we couldn't have timed the COVID crisis better from a digital infrastructure point of view in terms of that ability to switch from office to home for those who could. It made the world of difference, I would suspect.
No, absolutely. You're right. And we've been building our networks ahead of demand, actually, across our markets at MTN. And so we've had headroom in our network to take on more traffic. We saw, to your point, at the end of 2019, a surge, of traffic, through COVID, and actually we kind of think that we're behind the worst, touch wood, of the COVID lockdown effects. So to your point, it was fortuitous. Obviously COVID has had a lot of negative impacts, lives and livelihoods. But from an industry perspective, the one that we're in, we're able to, enable people to, find some sense of normality in terms of, can they carry on going to work? Can kids go to school? But what that also did, it shone a light on the inequities in societies, Bruce, which was, people like you and I could carry on working, but there's a whole host of people who didn't have that infrastructure. And now is where I said the governments have woken up to say, well, actually, we can't leave people behind. And therefore, we need to make sure that we create an environment where you, the telecommunications company, can make a decent return, but make sure that you provide infrastructure as broadly as possible, because that infrastructure is being provided by private companies, not by the state.
And here's the big challenge that you face, because you're facing enormous social and public pressure and state pressure on the one hand to make massive investments. On the other side, you're facing consumer pressure to keep cutting costs. It's almost like there's a race to zero here, and you're expected to be spending tens of billions of rand every single year improving access. Where do you hit a balance between those two?
I think the conversations today are actually a lot more mature and to use your word, a lot more balanced, with stakeholders more broadly. We understand that this is a very capital-intensive industry. As MTN, we spend $2 billion just putting, capex per annum, just making sure the networks can carry the volume of data traffic, across our network. The increasing conversations are about, what is the right market structure? We have a point of view as MTN that says, there are not enough profit pools. There's not enough of a profit pool for multiple players across our markets. Even the US is now a 3-player market. So if you're going to put the level of capex that we need to put in the ground to build our networks, we need predictable regulations, number one. We need sufficient spectrum. And we will be able to deliver ubiquitous digital services and make a decent return. So we are, in many respects, pushing for an agenda of regulatory certainty best we can, so we can plan ahead, and the appropriate market structures. The days of 5, 6-player markets or even 4-player markets in a country, not just South Africa, but more broadly across our markets, it's not sustainable. There's not enough of a profit pool to make for people to then say, I'm going to get the right return. So I think in the markets we're in, I think you're going to see consolidation. Consolidation is inevitable because the amount of capital investment that will be required to move from 3G, 4G, and ultimately 5G will be of such a nature that number threes, number fours, number five cannot make a decent return on the invested capital. But 1, 2, and 3, it's quite possible. And as I say, look at the US, 3 players.
Yeah, I mean, we've been talking about spectrum for a long time, and spectrum's very boring, and you like it, you're an engineer. But it's these bands of communication. So your garage remote operates in one band, and you listen to the radio in another band, and police radios and emergency services use another band, and then there is another band in which telecommunications players can play, and that's been quite a narrow band. Recently, we've seen that band widened by government that has made additional spectrum available. But there's still a lot of disagreement as to how that has played out. Is it going to hold things back in terms of opening up the market further?
Look, we're very happy in a market like South Africa that we've had this multi-band spectrum auction, finally come through. Many, many years of waiting for this. And we probably lost a decade and a half of development in South Africa. Because, right now, I look at MTN South Africa, we now have 179 megahertz of multi-band spectrum. That's the same as Zambia, okay? And Zambia is a much smaller market. Markets like Nigeria and others have more spectrum. I mean, spectrum is the oxygen of networks. And the more spectrum you have, the more you can be efficient. So to this point that we want universal access for everybody in terms of their ability to connect and at a decent price. Spectrum has a role to play in that. And so from a South African perspective, we've made enormous amount of progress in the last couple of weeks where, this successful auction, and credit to ICASA for having held the auction, notwithstanding some of the challenges. So from some of the operators, we challenged last year, but this year we weren't challenging. But I think as we think about the new technologies that will come, like 5G, you're just going to need a lot more spectrum. So the spectrum auction helps a bit. When we look at our own traffic, forecasts for the next 5 to 10 years, what we secured now will help us for the next 3 to 4 years. In 3 years,
do you see a future where somebody could get into a driverless car in Johannesburg, go to sleep and wake up in one piece in Cape Town, courtesy of 5G connectivity, because that's what's required for these driverless cars? Do you see that happening ever? Or are we just too big, too vast, too disparate to even begin to dream the Elon Musk dream?
I think part of the Elon Musk dream is very accessible in the next 5 or so years. I mean, we're seeing some of that, autonomous vehicle. We're seeing it in mining. I mean, we're doing POCs, proof of concepts, for private networks using 5G. And, you're going to have driverless vehicles on an open cast mining, pit in some part of Northwest South Africa. So there's part of that dream that I think is probably already here. But there's the dream that says you, Bruce, and I can drive Cape to Cairo and fall asleep and we won't crash. I mean, time will tell. But there is a lot, I think, that will surprise us on the other side of technologies such as 5G, around private networks, how that feeds into, I use mining because mining is the thing that we're looking at right now. But, if you look at ports, you go to the ports in Durban and other areas, they're going to be use cases for kind of, quite massive machine-to-machine interconnectivity, because that's what 5G basically is just an interconnected of machines.
And at this stage, it's more localized, it's more regionalized. You can do it in a confined space. But this idea of ubiquitous 5G coverage is perhaps a little bit further away. The great opportunity, of course, and it's an opportunity that you're exploring further and further and further, is this idea of mobile money. I mentioned the enemy earlier in M-Pesa, very successful in Kenya, brought to South Africa, didn't work here simply because the banking systems are so evolved and not necessary in a country like ours. But the wonder of mobile connectivity and the wonder of digital transactions, I think most people by now are used to these digital transactions. This strikes me not only from a banking perspective, but with your experience in insurance, you can tell me if I'm barking up the wrong tree, but whether there's an insurance opportunity, this massive fintech revolution that we see taking place in little pockets all over the place suddenly becomes the growth area for financial services in a telco environment in the next decade.
No, absolutely. And Bruce, the customer journey, the typical customer journey for our telecommunications customers is that they top up airtime, daily or weekly. So they go to the end of the street. There's an MTN agent wearing his or her, yellow ribbon, and they give them cedis, and they convert that cedis into airtime, and they use the airtime. But what we've created now is a platform where they give us those cedis, and you create e-money, which allows them, also to transact and be financially included. So we're leveraging that infrastructure, to be able to provide people who had, traditionally not been given access by traditional banks or traditional insurers, because the cost of access, the cost of distribution was too prohibitive. So we are just leveraging an existing distribution footprint to get to that last mile. I mean, and we can make a decent margin with $1.50 to $2.50 ARPU, to use your favorite terminology, on financial services. And I think a traditional bank will battle to make the economics work. So, what we are doing, we often think of it as driving financial inclusion, going beyond that last mile to be able to enable people who have not been provided for by traditional financial services. So you come back to your South Africa example. South Africa has got very deep financial, services, but we still think that even in South Africa, there's still a cash economy where, a mobile money business, could still be, relatively successful. Not the success we see in Ghana or may see in Nigeria, but there's still an opportunity. So this ability for us to drive financial inclusion much deeper, excites us. And, we'll work with banks. They'll partner us. So this is a win-win game. And I think if you look at the M-Pesa example, M-Pesa did not result in Equity Bank not growing strongly in retail, because those that money that they bring from under the mattresses, so to speak, end up as float in banks.
No, but precisely, inclusion is precisely that. It brings everybody into the system. I blame the World Economic Forum for coming up with the term fourth industrial revolution, because it's become the crutch for anybody, particularly in politics, when it comes to, oh my goodness me, the future. Oh no, the fourth industrial revolution will sort that out. And then when you scratch just a little below the surface, you realize that the vast majority of people have got not a cooking clue what they're talking about when it comes to how digital transforms the world. When you look at this African continent a decade from now, what has been the impact of these devices over networks such as yours in terms of perhaps helping us bridge the poverty gap that exists between the African continent and so many other parts of the world?
No, you're absolutely right, Bruce. I mean, I think digital infrastructure and digital services have an ability to enable Africa to leapfrog in many ways. And as much as we've never had really fixed networks outside of South Africa, the rest of the continent, communication services have come through from wireless communication. And that has had obviously an effect in accelerating economic growth and social progress. People are able to communicate, don't get left behind. And there's a business opportunity still. I mean, people think about mobile telecommunication as a business to customer, a B2C opportunity. I think it will fast become a B2B business. And as we move from the digital connectivity and services, we're looking at financial services. So it's in many ways can actually aid economic and social progress across our markets. I think the one thing that will be different across Africa is that we are going to pursue a much more an open access model to infrastructure to make sure that the returns that we can generate are sensible. So I think the competition on infrastructure, in years to come will be much less. We are going to have much more competition on services, and we're going to open up our infrastructure. We're talking about, carving out our own fiber assets and data centers. Part of it is to create an open access model, bring other investors to deploy their capital as we build out our businesses and improve our own return profile. And as I said, I think that ultimately in years to come, you'll have fewer operators, but very strong operators who are able to provide ubiquitous, 4G, 5G services. We're not going to have 2G and 3G services 5 years from now. Voice will be voice over LTE, and all data will be 4G, 5G. These are much more efficient technologies. So, I mean, there's also the opportunity of a single digital marketplace. And that's the one thing that I'm hoping that while I'm CEO at MTN, we're able to work with the AU to create a single digital marketplace. Because now we have the, African Continental Free Trade Area. The one thing that we can actually push quite quickly to, where there are no tariff big issues that to deal with, is actually to say, let's build a single digital marketplace. And maybe the crisis that we're finding ourselves a little bit with Ukraine and Russia, we'll concentrate our minds as Africans to say, let's not waste this crisis. There's a big opportunity for us right now.
Ralph Mupita, we will leave it there. I thank you very, very, very much for your time. And I thank you for watching. Thank you very much for joining us. It's hashtag ThinkBigPSG. It is part of a much broader series of lots of discussions with lots of interesting and influential people. And we bring that to you courtesy of PSG. It's free, it's shareable, it's open to absolutely everyone. So I hope they'll do precisely that. Go to your browser, copy and paste, or just click on the share button and send it to everybody you know. Thank you so much for watching. Have a very good rest of your day. Bye-bye.